Everybody, welcome back to Ox Talks. Thanks for watching the show. Thanks for liking these videos, hitting the thumbs up button, sharing the videos with people as many as you possibly can, and subscribing to the channel so we keep growing this community. Another story I want to share with you today that shows the declining health of the American consumer. This is out of Zero Hedge just a few minutes ago. Goldman issues grim outlook for Autozone, citing significant exposure to struggling working poor consumers. This is continuing the theme of low-income consumers being financially under pressure. Goldman analysts told clients this morning that their decision to downgrade auto parts retailer Autozone from a buy to a sell was primarily based upon the challenging macroeconomic environment for consumers. How often do we hear that term, the challenging macroeconomic environment for consumers? It says Goldman's Kate McShane led a team of analysts who said Autozone will likely see muted growth over the next few quarters. She noted that the auto parts retailer's consumer base is highly exposed to working poor consumers, which elevated inflation and high interest rates could crimp spending from this group and impact sales through the winter into early 2025. We are lowering our first, full year 25 estimate to $150.76 from $152.21, largely reflecting our outlook for muted growth in the next few quarters. Says McShane explained her rationale to clients about why the downgrade of Autozone from a sell to a sell from a buy. Number one, lower income consumer to which Autozone has significant exposure will likely remain under pressure into 2025. Number two, as cars become more affordable, we see increased risk of a lower amount of repairs. Number three, per 100X, Autozone's NPS and NPI scores have been on the decline, with NPI score approaching a 3-year low. Number four, increased risk for higher interest expense and or reduced share repurchase with 2025 notes coming due. So that means they have debt. She provided a whole page in the note about warning a waning sentiment among working poor consumers and continue to point to Autozone's large exposure to this income bracket. And obviously, Autozone, comment below. We have Autozones here in this area in Southern California. People run into, it's a way to do it yourself, do quick repairs to vehicles, change oil, top off, fluids in your cars, buy windshield wipers, all that kind of stuff, right? Pick up waxes and polishing stuff and cloths for detailing. It says, they note recent sentiment for the lowest income consumer continues to be under pressure, which is, again, their core consumer, do-it-yourself. Her outlook on the company is a muted one, okay? And it says, we note that Autozone growth has been muted over the last several quarters, even once the company cycled through harder compares. While inflation has been less of a tailwind to same-store sales versus the last few years, unit growth has remained under pressure, with a lower-income consumer deferring purchases in do-it-yourself and not buying discretionary products, which compose about 18% of Autozone's sales. The company has also highlighted challenges in their commercial business as they manage through growing pains of a larger commercial business and need to further build out their supply chain with hubs and mega hubs. We note the company opened 8 hubs and 11 mega hubs in 2024, which is around half of what they did in 2023. They will open more in 2025. However, the operating cadence of these locations will be a second half loaded. It says, we note prior stronger performance historically came as Autozone's domestic commercial program increased as a percentage of total auto parts sales, which drove expansion in our estimated same-store sales gap between commercial and retail. However, these gaps have since narrowed. So Says we think there is still some level of pent-up demand for new vehicles. Interesting rationale. New vehicles that will become increasingly unlocked as affordability improves. Well, that means because we know with new vehicles, the inventory is going to start stacking up in these car lots, right? They can't move these vehicles. What they're saying is with increased basically inventory, the prices are going to have to start coming down, which will likely remove some degree of aftermarket demand if existing vehicles are scrapped, meaning people will just go out and buy a new car rather than trying to fix their old beater. Given this impact, the analyst and AutoZone's valuation remains above historical absolute levels despite slower growth and the increased risk to the bottom line. What they're saying is that the AutoZone stock is overvalued given all these headwinds. The biggest takeaway is that the low-income consumer stress only worsens in the latter parts of the year and will likely worsen into early 2025. We cited a Goldman note on Friday that showed rich and poor consumers were undergoing trade down trends, right? So they are getting smaller. They are not making discretionary purchases. They said 18% of the AutoZone sale are called discretionary purchases. I guess that would fall in the auto detailing category, something like that. But oil changes, coolant top off, windshield wiper fluid, things of that nature, spark plugs, things that I would think are not discretionary at all, don't make up, I guess, 80% of AutoZone's business. So guys, I just finished doing a video, which uploaded a few hours ago, about how Best Buys are closing, 7-Elevens are closing. We have AutoZones under pressure. What's the common theme here, right? This article, it's kind of sad that they describe the category of folks that let's say patronize AutoZone as the working poor. But again, we have the working class of this country which is struggling. And I don't know, comment again if you guys are seeing any AutoZones in your area closing down. Doesn't talk about stores closing per se, but that's next. We're going to hear, well, they decided not to renew these leases across the country, and they're going to be, for efficiency, closing locations. So that's next. Once you have a downgrade of the stock, the company loses value, they have debt to repay, and this becomes kind of a self-fulfilling prophecy. I hope not, but it looks to be that's where it's heading for the AutoZone. We'll leave it there today. Again, I appreciate all of you watching. And the stock market closed today, made all-time highs. Okay, so the disconnect between Wall Street and Main Street is getting worse. Okay, with that being said, all of you have a great day. I appreciate the support for the channel. Talk to you soon. Bye.